Hey now, I'm back with a review of a very simple, easy to learn, high probability scalping strategy that I found on the Forex Signals channel and have tested for 100 consecutive trades. And at the end of this video, I am going to share my ideas on how to make this system even more profitable. Just be sure to subscribe before this happens to your trade. I call this system the Lockwood Scalp, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 3 free TradingView indicators on 2 different time frames. As always, links and settings to all indicators are listed in the description. All 3 indicators are exponential moving averages, or EMAs. The first EMA is set to the Fibonacci number of 21, colored in white, and placed on both charts. The second EMA is set to the Fibonacci number 13, colored in orange, and placed on the bottom lower time frame chart. The final exponential moving average to place on the chart is set to the Fibonacci number of 8, colored in blue, and placed on both charts. The EMAs on the higher time frame chart will determine the higher time frame trend, and the EMAs on the lower time frame will provide our entry triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is the euro versus the US dollar. 1-hour candles on the top chart and 5-minute candles on the bottom chart. The rules to enter along on the Lockwood Scalp are: first, on the higher time frame chart, the 8 EMA must be over the 21 EMA. Second, price on the higher time frame chart is trading above both EMAs. Then we move to the 5-minute chart, where the 8 EMA is over the 13 EMA, and the 13 is over the 21 EMA, all fanned out with space between them. Price touches the 8 EMA in blue. Our rules are met when this candle closes. That is our trigger candle. A buy stop order is placed 3 pips above the trigger candle, and the stop is placed at the lowest price level of the previous 5 candles. The setup is canceled if price closes below the 21 EMA in white. Target 1 is 1-to-1 for half of the position, and target 2 is 2 times risk for the other half. Our buy stop is hit on this candle and the trade is entered. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And this example hits the target. If you enjoy this content, make sure to click the like button. I have one more long example. On the 1-hour chart, the 8 EMA is over the 21 EMA, with price trading above both moving average lines, confirming our uptrend. On the 5-minute chart, the EMAs are fanned out in order with the 8 EMA on top and the 21 EMA below. This candle touches the 8 EMA and becomes our trigger. We place an entry order 3 pips above the trigger and leave it there as long as price does not close below the 21 EMA in white. The stop is placed 3 pips below the lowest level of the previous 5 candles, and the position is split into 2 equal parts. The first part is 1-to-1, and the second target is 1-to-2. The trade is entered on this candle. When target 1 is hit, move the stop to break even, and target 1-to-2 for the second half. And this example hits the target. Now we flip to shorts. This is what I will test for shorts. First, on the higher time frame chart, the 8 EMA in blue must be under the 21 EMA in white. Second, price on the higher time frame chart is trading below both EMAs. Third, on the 5-minute chart, the 8 EMA must be below the 13 EMA, and the 13 must be below the 21 EMA, all fanned out with space between them. Fourth, price touches the 8 EMA in blue. Our rules are met on this candle. That is our trigger. A sell stop order is placed 3 pips below the trigger candle, and the stop is placed at the highest price level of the previous 5 candles. The setup is canceled if price closes above the 21 EMA in white. Target 1 is 1-to-1 for half the position, and target 2 is 2 times risk for the other half. Our sell stop is hit on this candle and the trade is entered. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And this short hits the target. I'm going to give you one more quick short example. On the 1-hour chart, the 8 EMA is under the 21 EMA while price is trading below both moving average lines. On the 5-minute chart, the EMAs are fanned out in order with the 8 EMA at the bottom, 13 EMA in the middle, and the 21 EMA on top. The candle touches the 8 EMA and becomes our trigger. A sell stop order is placed 3 pips below the trigger candle, and that order is left open as long as price does not close above the 21 EMA in white. The stop loss level is placed 3 pips above the highest level of the previous 5 candles, and the position is split into 2 equal parts. Target 1 is 1-to-1, and target 2 is 1-to-2. The trade is entered on this candle. When target 1 is hit, move the stop to break even and target 1-to-2 for the second half. And after some consolidation, the example hits the target. I'm going to give you some fantastic ideas on how we can improve this system, along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This test was done on the euro versus the US dollar with a combination of 1-hour and 5-minute Japanese candles. It took a brisk 3 months to find the 100 setups. Most winners in a row came in at 8, and the most consecutive losses came in at 6. This dataset provided for a 64% win rate, with 36 of those 64 trades moving on to hit both targets 1 and 2. The maximum drawdown was 7.5%, with a decent profit factor right under 2. Risking 2% on each position, the gain on the account was a very robust 65% gross over those short 3 months. And I have some intriguing ideas on how we can make this system even more versatile. The equity curve here starts out with some consolidation, and then a very nice classic up and to the right chart pattern. Zooming out and placing all the setups on the 4-hour chart, we can see some nice trends during this time period, which matches up to our expectations when using a trend following strategy. I give this system a trader's landing score of 7 because the concepts this system teaches is wonderful for new traders, specifically using multi-time frame analysis and trading with the trend. But there is plenty of headroom for improvement, which can be a very good thing. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, looking at simple price action and market structure can be extremely powerful to get you into trades. Here, you can see the system rules met, but with the added confluence of double rejection on the EMAs at a key resistance level. The chances of this setup working out is greatly enhanced with this confluence. Second, if you see the trend keeps breaking the rule and closing above the 21 EMA, it could be an indication that you are on the wrong time frame. Moving up in time frame will get you into these trades with the added benefits of less fees. Third, the take profit method can be optimized. Some of the many ideas I can share are using a trailing stop loss, taking the entire profit at 2 times risk, or just a cross of the moving averages. If you want to know some more ways, just ask in the comments below. Furthermore, when executing trades on the 5-minute chart, you must be cognizant of spreads and fees. This stop loss level would have been triggered on many instruments because it is only 3.6 pips from the stop loss level. Moreover, and from a subjective point of view, as you look at more and more charts, you will learn to recognize certain things. There were many wins in a row when the chart looked just like this. If you can find an identical chart, there are many opportunities to take money out of the market. Additionally, adding an oscillator on the chart, like the stochastic RSI, can help confirm setups. A little trick is looking for when the stochastic RSI moves to overbought very fast relative to the small price move. This is a good indication that a trend continuation is coming soon. If you want to support this channel and the work I am doing here, in addition to connecting with some like-minded traders, I encourage you to check out our Circle community where we are discussing all things trading. And have a great day, because you deserve it.